this is altogether a different session that we are going to have on global investing. Since ages, Indian producers or Indian consumers are being used by the foreign companies to make the profit from India and repatriate back to their home countries. Starting from Indian Tobacco Company to the Facebook or Apple or Netflix or your Microsoft or Google, all these companies are launching variety of their products in Indian markets, making huge amount of money, good amount of profits, but the entire capital appreciation gain or the opportunity size is being enjoyed by the investors in United States or Europe for that matter. So like for very long period of time, there is a need for how an Indian investor can go abroad and use investments abroad. But our Foreign Exchange Regulation Act, a draconian law that was made by the Indira Gandhi government at that point of time, just prior to the emergency, never allowed the foreign currency transactions in an easy manner. The convertibility of Indian rupee was a big challenge. But over a period of time, after the liberalization, we have a wonderful law, Foreign Exchange Management Act 1999, and it has also evolved substantially since then. So the remittances in a foreign currency have become comparatively much easier post the Foreign Exchange Management Act. And with that, foreign investing in the equity stocks or investment in real estate or let's say government bonds abroad, no one will look for bonds, but primarily at least equity and the real estate has become much easier. And with that, the taxation hurdles have also increased. On taxation front, at least Government of India has also launched a variety of new projects recently to ease the international taxation norms, but still it remains to be an absolutely tougher area. So with that objective, we have this wonderful session on global investing for Indians. We have two wonderful speakers with us. 𝐓𝐡𝐚𝐧𝐤𝐬 𝐅𝐨𝐫. He is a dear friend of mine. So we met during our student days back in PE1. He's practicing as a chartered accountant for last almost 16 years. He has worked with the PricewaterhouseCoopers, EY, and thereafter started his entrepreneurial journey with as a founder of TaxSutra, a leading portal which is providing tax information to the Fortune 500 companies and various top corporate houses in India. And thereafter, since January 2019, he is involved in the international taxation consultancy and M&A consultancy as a founder of Globeview Advisors LLP. So he's working on that front. He's a all India ranker in the CA intermediate as well as the CA final examination. If I'm not mistaken, it was second rank in the CA intermediate. We were in the P1 at that point of time, and Ame used to be an inspiration for all of us. He was an intermediate, and our structure was P1, P2. And since then, he is working in international taxation. So I thought that the taxation issues, Ame will be the best person to handle. You all know my taxation is something which is weak area. Ame is a great resource on taxation. And we have Swastik Nigam, who has worked as a director with the Deutsche Bank for almost 11 years. He has handled a multi-currency portfolio in the Deutsche Bank. And he has founded an organization called as a Vinovista. It is a platform that is very easy to use platform that is being created for making investments abroad using liberalized remittance scheme under the FEMA. He is an engineer and a graduate from IIM Ahmedabad, and he has held the multiple positions for IIM Ahmedabad Alumni Network in London also. So today we'll keep it very informal. We'll have a first session on the global investing by Swastik. Then Ameya will speak on the international taxation issues, taxation regarding investments or other double taxation avoidance agreement related issues. And then we will open a house for question answer from your side. Please be patient for about 1 hour. You will get altogether different source of knowledge. Lot of questions you will be having. We'll definitely take up all those questions at the end. I think Swastik will go first, Amey. I think taxation we can cover up afterwards. That will be better.
Yeah, absolutely, Abhishek. Look forward to Swastik's presentation. It's going to be very exciting.
Yes. Swastik, over to you.
Great. Thank you. Thank you very much, Abhishek, and great to meet you as well, Ameya. In fact, taxation seems to be the most popular question that we receive as well. So I myself am very eagerly looking forward to your follow-on points. So let me just quickly jump into it. And Abhishek, thank you very much for this opportunity. It's great to be able to speak. This is almost in this sort of seamless world where we don't know where weekdays and weekends tend to merge. At the same time, I feel that this is one of the best ways I could be using my Sunday, especially where everyone's
this is
holed
best.
up at
Right
home.
now, there are 934 people who have joined in. The total registrations were about 1,400. Let's hope we can accommodate only 1,000 people. Let's hope we can serve maximum people out of it.
Absolutely. And I hope everyone, whoever's listening in, is keeping very safe and healthy, at your own homes or wherever you're listening in to this session. So I'd love, let me quickly just jump into it, so that, I think we're going to expect a lot of questions as well. And let's quickly jump into the meat of the matter. As Abhishek mentioned, I'm Ahmedabad grad. Pratik, who is my co-founder, is based in New York, and I were fellow batchmates. And after IIM Ahmedabad, I joined Deutsche Bank at a very interesting time. Lehman Brothers was just about to go under. It was an extremely interesting time. I spent my career with Deutsche Bank in London, where I ran a global multi-asset trading book. I also, was the chair of the IIM Ahmedabad alumni chapter during my period there. I think it was I'd say a confluence of all of these things. The fact that I had been based in London, had got this unmitigated access to investing across the world in any kind of asset that I would like to, or anyone that I knew of in London as well. However, Indians did not have as easy an access or as wide a platform to invest. And that was really, I'd say, the germination of the idea for Vinovista. So let's literally just dive into it. I don't want to take any more of the time. So let's touch upon the liberalized remittance scheme, LRS. This is something which has become more and more popular over a period of time. It's an extremely generous scheme. Every Indian is allowed by the RBI to remit or to utilize up to $250,000 per head per year for a wide variety of uses, whether that is for expenses. So when you travel overseas to on a travel tour, or for education, you're paying university fees, or just to maintain your relatives abroad, like, pay for your children's sustenance overseas, that comes under LRS, as well as investing for acquiring an asset. And like you mentioned, when you buy stocks, you're acquiring an asset. When you are investing in real estate, you're acquiring an asset. Or when you just want to be able to hold a bank deposit, to mitigate some of the currency risk because you have some liability propping up in the future, and you have a bank deposit, that's an asset, right? So those are capital account transactions. Now, the current account transactions or expenses have been increasing extremely quickly, but it's only in the recent past where the cognizance for LRS has really increased. The ultra HNI and the HNI crowd had always been aware of LRS, and it started off at a much more humble number. In 2004, this number was only $25,000 per head per year. Now, over the last 4 or 5 years, it's gone up to $250,000 per head per year. And this is again part of India's own liberalization, India's own aspirations as well, that it well congeals with. But now let's understand as to why invest overseas, right? Abhishek actually mentioned this point, particularly like how all of these companies come to India, but they're the shareholder of these companies, whether they're in the US or Europe, are doing really well. And we've seen this before. This happened 400 years ago, right? 400 years ago, you had the East India Company, which came to India. It took raw materials from us, sold finished goods, but the owners of those companies did extremely well, right? That's the same thing that's happened today. So if you look at Amazon and Flipkart, these are the two largest e-commerce players in India. Can you invest in their stocks as seamlessly and easily? No, you can't, because Flipkart is owned by Walmart, and that's listed in the US. Similarly, social media is primarily on Facebook or Twitter. Our OTT providers, Netflix, Disney, Amazon Prime, and the technology, our mobile phones are either using an Apple iOS, operating system, or an Android. For both Google and Facebook, India is the largest user base, right? These are today's East India companies in a way. And however, we do have an ability to invest in them. And that's really, what we're trying to consider over here. These are the brands that we consume. However, we have not been able to have as easy and seamless access to invest into them. Let's look at what's actually been happening with the global Indian, right? LRS, it's a very large number. And we have been, in fact, spending a lot more than we ever did before. Over the last 7-8 years, we are now spending 200 times as much money today as we were, 8 years ago. Similarly, the money that we're spending today to educate our children overseas is 40 times the money that we used to send, 8-9 years ago. Extremely aspirational set, that we in India have become. And that's again part of, us Indians becoming far, far more global. So as of course we start consuming a lot more of the rest of the world, we must start evolving ourselves into becoming an investor in much of the world, so that we can meet these liabilities in the future through our investment as well. But is there really a good sound reason to be investing overseas? And this is where we see, right? In fact, the S&P 500, which is what we call as the SPX, has outperformed the Sensex 2:1, over the last decade. There are a wide variety of reasons for this, right? There are a large number of themes which we have all been a consumer of, which we've just not had access to in India. Technology being one, and these technology companies, as we know, have done extremely well. Secondly, capital, gets attracted to wherever there's the greatest amount of liquidity. So if you look at what's the market cap in the US, it's approximately $30 trillion vis-a-vis $2 trillion in India, right? That liquidity attracts more liquidity, and that means more number of companies try to list there, more number of investors are drawn towards there. And that's the other part as well, as to, we're actually, if we keep ourselves invested just in India, we're just looking at a very, very small part of the entire investment universe available to us. Thus the need to, as we know, there is no free lunch in investing except for diversification, as is well known. There's a clear need for us to be able to diversify our portfolios and invest overseas. That's another very, very clear, I'd say a rational reason for us to be investing beyond India's borders. So how can you build a global portfolio very quickly? And one of the key ways in which you can build it is you can access the world from the US market. You have, companies like an Apple or an Amazon, which are, of course, US firms, and that's incidental due to the kind of country US was, extremely large ecosystem of building technology products and firms of that kind, and especially even biotech, for example, in a current environment. But progressively, a lot of the revenue is outside of the US, right? 60% of Apple's revenues are generated outside of the United States. Similarly, for Amazon, a very large proportion of its revenue is outside of the US as well. So these are now supranational companies. They're just incidentally listed in the US, right? Many of these companies have a very, very strong focus on India, as we particularly know. Secondly, is you can access a large number of country teams through ETFs. For example, if you want to gain access to the UK market, the index in the UK is the FTSE 100. Can you get access to it to the US markets? Absolutely, you can. If you want to get access to the DAX, which is Germany's index of the top 30 companies, absolutely you can. And that's because each of these have a fund, an index tracking fund, which is listed in the US. And as we all know, even in India, there's been a great focus of moving people away from mutual funds towards ETFs because of the lower fee structure and thus the better returns. ETFs have, of course, been a well-ingrained part now of the Western world for quite some time. Even during my career in Deutsche, we were very closely, including me, I used to be running one of the ETFs for the bank as well. And the thing is that it really becomes far, far more customer-centric. Passive investing is extremely fee efficient and takes a lot of the drag away from the client's portfolios. So that's the second part. You can get access to country and market-specific ETFs. And finally, thematic investments. For example, if I were to ask you, how can I invest in the electric mobility story by investing in the public markets today in India? You can't. However, you can do that through a company like Tesla in the US, right? Or semiconductor chips. and you don't have those options here, but you could do that with an NVIDIA, an Intel, an AMD, for example. So you've got all of these ability to invest in themes which are otherwise just not available here in India. How do people currently invest in the US? You've got traditional broker accounts. You know, these are accounts which have primarily been existing for a large number of high net worth clients and the likes. They are, however, high fee, and they have no, you know, you must invest in full shares. And that's a little bit more difficult because when you say full shares, a share like Amazon's, you know, over $3,000, approximately 2.5 lakh rupees per share. That's pretty expensive for you to even be able to buy one share of. Secondly, these will have high fees, you know, minimum of say $10 per month that you must be transacting in them. Secondly, you could try to invest in a rupee denominated fund, which tracks a US index, which could be, you know, like an S&P 500 tracker here based in India, or a NASDAQ 100 tracker. There are a few challenges with this. One is that they have a higher fee, and that higher fee results is one reason for the lower performance. A second reason for the lower performance is that they're trying to track the US markets, but the US markets won't open till the Indian markets actually have shut. And that's another thing in terms of an asynchronous kind of pricing. So when you're a trader, you really aren't able to appropriately trade because the US markets are closed. And that results in very high bid-ask spreads. And finally, you know, what is the other option? There's no easy way for you to asset reallocate. What do I mean by that? So say you've invested in stocks and they've done extremely well, you know, Amazon, Apple, Google, etc., and you want to liquidate them and you want to buy, you want to use the money to pay for your child's education. And you can't do that with many of these brokerage only like platforms. So that's the challenge there, right? You can't do any, for the last part also quite particularly is that, you know, say you want to actually pay the child's education fees and so on, you'd need to repatriate all the money back to your bank account in India and then send the money again. You've got lost FX, you're utilizing your LRS limit twice for the same, you know, set of funds in a way. So it becomes extremely inefficient as well in its wholesome process. Let's look at, these are two, you know, themes particularly, right? Foreign education and real estate planning. We've seen there's a great amount of interest as India becomes wealthier and wealthier. And we've seen this, we've seen the story before with China. China is not a country that speaks a lot of English, but of course, because of the wealth that's grown in China over the last, you know, 2 decades, there's a lot of Chinese immigrants and especially students studying overseas. India, of course, just by the nature of our a very strong English education in our early days results in, you know, has resulted in, oops, sorry, I think I might have jumped it, has resulted in a strong push towards foreign education. However, how do you plan for it? You have a depreciating rupee, you have a very low domestic yield, right? And that's especially now in, you know, where our savings rates are sort of falling down to, you know, savings rates in the banks are going down to 3.5%, 4% or so, as well as even the cost of education in the US is skyrocketing. What you could have gotten for 20,000 now on average is at least $50,000, $60,000 a year or so. So you want to be able to save for that particular goal, the goal of being able to save for your foreign education. Secondly, foreign property. There is, you know, in India, property doesn't really yield a lot in terms of the returns. What do I mean by that is the rent. Secondly, to be able to invest in foreign property, and why this is becoming a little bit more interesting and exciting, is that people are able to get residency requirements overseas, right? Whether it's in a country like Portugal, Greece, etc., or the EB-5 visa in the US. So that's the second, you know, thing where people want to be able to invest in property. Property is a kind of an asset which is not as volatile as stock markets, of course. A lot of people think that it is a decent form of long-term capital preservation as well as growth. So that's the second thing in terms of investing in foreign property. Now, however, to invest in property overseas, you need a place where you can hold a deposit account, where day one, for you to be treated as a serious buyer, you need to be able to hold the money, save it there. Secondly, for capturing all the rental yield, otherwise the rents will need to keep coming back to your account in India. So you need continue to be able to maintain an account in the country where you've purchased the property, or at least in the currency in which you're receiving that rental yield. And finally, as well, you need asset reallocation, which is a seamless way in which you can, sell stocks, liquidate, buy property, vice versa, right? Finding a more wholesome solution. And this is also how we looked at building Vinovista. So in a very sort of quick way, Vinovista is regulated by the UK's FCA through our appointed representative. We are an appointed representative of a fully FCA regulated entity in the UK. We have an extremely experienced team. Each of the team members in leadership have at least a decade of experience, anything from 12 to 15 years of experience. We are blessed to have a very illustrious advisory board. It includes some of the who's who of India. Rama Bijapurkar, one of India's foremost consumer marketing experts, who sat on the board, and who continues to sit on the board of ICICI, and has also sat on the boards of banks like Axis, RBL, Nestle, HUL, Infosys, amongst others. And Behram Vakil, one of the leading lawyers of India, is of AZB and Partners, the founding partner at AZB and Partners. In designing this process, of course, we had to take care of numerous requirements from the US, UK, and India, while as well making it as seamless and as customer friendly as possible. So it's a 15-minute digital onboarding. One of the key distinguishing points, we've received this from quite a few of our clients as well, is that you can open your brokerage account through us, which is overseas in the US, and through our UK regulatory framework, far quicker than you can open a domestic brokerage account. And similarly, we'd expect to have it for our bank accounts as well very soon. We have built an easy, intuitive app, and of course, we continue to take client feedback to make it even better every time that we do a release. We want to keep our cost of US brokerage extremely client-centric and keep it as close as to what you would spend all in investing domestically as well. And with the global multi-currency accounts that we are looking to provide very soon, before the end of this quarter, ideally, you'll be able to invest in a whole host of assets, not just listed securities and real estate. In terms of the securities, security provided to each and every account, because these are all well-regulated accounts, each and every client gets a $500,000 SIPC protection, which is needed for, which is provided to all our clients, the end clients as well. So in all honesty, think of Vinovista as your 3-in-1 global investing account. You can buy stocks, you can hold stocks overseas, as well as have an integrated bank account inside the product. How do you get started? We'll just try to show you literally a 1.5 sort of minute video. If any of you have already been through the process, that will sort of give you a bit of an idea. I'm just going to try to full screen this. So you would sign in, just give your mobile number, get an OTP, start with all of your regular requirements, personal details, and we need to do all these verifications to ensure that we get it right. This is all you need. You just need your PAN card, Aadhaar card, and take a selfie video, and that's all that's required in terms of onboarding our clients. We've masked that part because, of course, this is personal details of whoever did it. More often than not, 60-70% of our clients are able to go through completely seamlessly. We do have instances where our clients require a little bit of hand-holding, and where we have internal compliance, then reach out to them. You go through the terms and conditions of our broker partner in the US, which is 𝗙𝐹. The W-8BN form, many of you may know, is a declaration that you give to the US authorities that you are a non-resident alien, as they call it, i.e. you're not a US citizen, you're not a green card holder, and you're not a resident in the United States. So that's the W-8BN agreement, which the clients sign, and that's it. Your account's created. This is what the interface looks like. You've got this is your profile and accounts, your trading account, to fund your account. These are the details. With your account number will automatically prop through in the further credit too. When you click detailed instructions, you'll be able to see each and every bank providers that we've got details of how, based on individual banks, what the details are. So you've got ICICI, HDFC, SBI, Kotak, IDFC First, Citi. With the thing, and just in advance of all of this, we've already got the generic instructions for most of the accounts. Once you've sent the money, whether it's digital or online, whether it's digital or based on the form, just let us know you've sent it so that we can keep a tab on it as soon as it's received and work with our broker partners in the US. This is what the interface looks like. You've got a bit of a screen in terms of the news. You can drill down into news. You can see what's happening with companies that you'd like. We've got, most of the large firms already. We've got over 120 different securities, 105 of the largest companies already. We didn't want to, put a deluge of companies for all of our people, for all of our clients, because then they'd just be lost. And that's it. That's pretty much a quick 2-minute overview of what the product looks like. Let me just, sorry, I'm just going to get back into the screen. And you can literally, after you've remitted your capital, you can build a very, very broad-based, extremely diversified portfolio within a few minutes. You've got a broad set of ETFs, from listed equities, which are S&P 500, NASDAQ 100, even to gold ETFs, gold miners ETFs. So you can build a large diversified portfolio. You've got fixed income ETFs like bonds. So the largest US companies, corporate bonds being tracked. I know that bonds are still a very, very young investment theme in India, particularly. But of course, in the West, it's been very well trodden for quite a while and very, very liquid market as well. You can invest in growth stocks like the tech companies, or in value stocks as well. Could be a bit like a Berkshire Hathaway or the likes. And that's it. I wanted to just give you this very quick, brief summary. If you sign up, for everyone who's listening in, you can utilize this promo code ADZ, where it requests for a promo code or referral code, and everyone who signs up using that, when you fund your account, you'd get $5 additional credit to help you in your first steps to becoming a global investor. Back to you, Abhishek.
Yeah, just 2 quick questions that I have. You can now switch off the PowerPoint so we can see everyone. Just click on stop sharing. Yeah. There is one slide where you had mentioned the returns of Sensex and returns of S&P 500. And S&P 500 has outstripped the Sensex by almost 2.1 times in the last 1 decade. So can you explain the audience the reason behind why it has outstripped because that was S&P 500 in INR terms. So that is basically taking into consideration depreciation, currency.
Exactly.
That is number 1. And number 2, in India, there are a lot of ETFs that have started, like Motilal Oswal has started the NASDAQ ETF, or Parag Parekh has got a long-term equity fund, which has about 1/3 allocation to the US equities. So how different it will be for an investor to go for the Indian mutual fund versus the direct ETF on the Vinovista platform?
Absolutely. So let's start with actually the first question as well, right? Why have the US markets actually outperformed significantly? And we'd say, so I think technology has played an extremely strong, role. Technology companies have played an extremely strong role over the last decade in terms of how well they've performed. These are particularly the FANG stocks, right? These have become, in the last decade, supranationals, right? These were not, so pre-2008, it was, I'd say, a far better, well-balanced universe in terms of course, you had the US markets that always did tend to perform very well. And then you had got a young market like India, which had been performing very well. You'd got this whole BRICS theme, and India was a very critical part of this BRICS theme to be the one to be betting on. But then what came about because of technology firms is it literally flattened the universe, right? Global tech firms have had no tariffs to worry about in terms of their global expansion. All the things that have traditionally bogged down old manufacturing like firms, they have sort of not really been the big reason. And that's why you even see that tech firms, even in the S&P 500, have an outsized sort of weightage. Suddenly, you've got 3-4 companies which are $1 trillion companies each, and then you've got like India, where all of its market cap is $2.5 trillion, right, at the other end. So that's been, I'd say, a very, very critical reason for these tech companies have come and built these moats in this post-global financial crisis world. And that's the big reason for this significant outperformance. And we can see that, right? We can personally touch and feel that, because we are personally touching and feeling and become these massive consumers. If you think of it 10 years ago, which US firms were we largely consuming, and we would sort of be limited to a Procter & Gamble, maybe a Ford, a General Motors in terms of the automotive industry. But now over the last decade, this is really what's taken off in the US markets particularly. Prateek, do you have anything to add to that?
I would just say that in terms of the performance, there's also the dollar INR, right? So that has almost out of the 250% or outperformance that Indian markets have had in the past, almost 200% is based on dollar INR depreciation in the last decade. So that adds another 4 or 5% annually just on the outperformance of US markets.
So basically, to sum up for the audience, you will be getting the returns of the US denominated stocks. So let us say US stocks have appreciated by 7-8% per annum. But the Indian rupee depreciation will also be helping the Indian investors. So let's say depreciation of Indian rupee at the rate of 4-5% per annum will create a both. It is not a straightaway addition. You need to consider a Fisher's effect. But 7 plus 4, that is 11% return that you can create by investing in the US stocks, because you get a benefit of a depreciation of Indian rupee. Today, it is $1 equal to 75. But maybe let's say 10 years down the line, when you look for a foreign education or when you look for a foreign travel, that $1 could be equal to 85 rupees. So you get that additional advantage also in addition to the returns. That is the point that Prateek was trying to drive.
Absolutely. Yeah.
And Swastik, can you answer on that
the second one
part?
on the Motilal Oswal? In fact, I'll ask Prateek to chip in as well, right? So the domestic mutual funds, there are a few different reasons on how they sort of tend to perform. One is that, see, like day one, when you were to invest in, so Motilal Oswal fund, or generally speaking, mutual funds in India, the direct mutual fund, I think for the S&P 500 has got 0.5% in terms of for direct, and 1% for a regular mutual fund is their AMC. Vis-a-vis the SPY index that we've got in the US has got only 0.03% AMC. So we're talking actually a 30x difference in the annual maintenance charge, right, for actually just investing in that underlying asset. Secondly is about the amount of liquidity. A Motilal Oswal fund or any wrapped fund, right? So all of these funds these are actually US funds with an Indian wrapper of some kind. And so these are INR wrapped funds. They have significantly lower liquidity than the parent entities, or than the main tracker funds in the US. So whereas you could have the S&P 500 fund in the US, which has got over $100 billion in assets, so thus is extremely liquid. So the bid ask will be very, very tight, number one. Secondly, these are trading at the live US market hours, right? So where all the underlying constituents of those markets are actually at live price. Vis-a-vis over here in India, you're going to try to trade based on the futures pricing and expectation at what the futures of the S&P 500 are. And you try to proxy it. And that results in a very wide bid-ask spread, because there are far fewer market makers, i.e. banks that are providing this liquidity, or funds that are investing in these domestically. And secondly, he's also trying to proxy what will happen at the end of the day. So based on when you could be actually investing in and getting out, you could be 17-18% different from if you were just actually investing directly in the stocks and the ETFs in the US. So that's a very key part. Second is the number of funds, right? Each time, otherwise, you'll need to wait for a fund to become wrapped by an Indian mutual fund provider and then get provided. So for example, there's a fund which is gold miners fund. Now there's very rarely going to be a chance for you to wait and when will I get this domestic rupee fund, right? Otherwise today, literally you can say, okay, I think gold miners are going to do really well because gold is going to do well. There, the investor provides you that access. Tomorrow, 𝗙cie 100, the UK market, let's see what's going to happen with Brexit, but it could look like an exciting market again and look very low cheaply valued. Again, you'll need to otherwise keep waiting for a fund to list in India, and that takes a whole host of regulatory approvals and so on to get. Otherwise, you could just as well invest in the parent or the master fund in the US as well, or the UK. So those are the main sort of distinctions.
So for the audience, it basically is trying to say that the direct access to an ETF as compared to the indirect route of a mutual fund in India is better. There are some questions which have come up, but I will take up those questions after the Amir finishes his talk on the taxation part of this. So a lot of questions are there. So Amir, over to you. Explain the taxation in the easiest possible word.
Thank you, Abhishek. And so it was a brilliant presentation, very useful. Personally, for me as well, I learned quite a few things. So coming to the taxation, I'll be very brief. There are 2 or 3 different aspects which we have to look at. First is when the money is going out of India, when you're trying to invest in US market, when the money goes out through the LRS route, liberalized remittance route, there are certain tax implications. So that's the first part that we will see. The second part is when you invest and make returns on these investments, you might earn dividend income from US investments. So what are the tax implications in USA and in India? That's the second part that we will see. The third aspect is the capital gain. If you actually liquidate these investments and earn capital gains, how these gains are taxed in US and in India. Another angle that we have to see is the estate tax, which is very, very critical component from a US tax point of view. So I'll briefly touch upon that as well. And last but not the least, the black money law that we have in India, especially since 2016, we have a very stringent law around disclosures of overseas investments. So these are the areas that I will be touching upon in the next 10 minutes or so. So the first aspect, as Swastik mentioned, you start investing in the US market through the liberalized remittance route, LRS. You can remit up to $250,000 per year. That's a substantial amount. In the budget of 2020, a new tax collection at source, TCS, has been introduced on the remittance under LRS. So essentially, when you remit, let's say $100,000, the remitting bank has to collect 5% of the remittance amount and deposit it in your name. It's similar to TDS, but it's a new provision which will take into effect from 1st October this year in about a couple of months. So 5% TCS on LRS is a very, very critical cash flow component that you have to consider because you will get a credit of the TCS paid against your normal Indian taxable income, but at least on the LRS amount there's a 5% TCS which is applicable. If the LRS is for the purpose of education, and Swastik touched upon it, the TCS rate goes down from 5% to 1.5%. The TCS is applicable if the remittance is more than 7 lakh rupees per year. So this is an important aspect from a cash flow point of view that one has to consider. 5% is a reasonably large amount which you have to keep in mind. So this is a new change you must keep in mind. And one of the reasons, and Swastik showed the statistics as to how LRS has been increasingly used by the Indians, and precisely to target the high net worth individuals, government has introduced 5% TCS to track these individuals. So that's the objective, because government saw a multifold increase in the last 5 years, particularly under the LRS route. So this is one. Now money goes into US and you invest in shares. What happens if you earn dividend income from those shares? From a US, I'm not an expert on US, so this is based on my reading and understanding that I'm sharing the US implications. In US, typically there is a 30% domestic withholding tax which is applicable on the dividend income. So any dividend that you earn in USA, it will attract 30% withholding tax in USA. This tax can be brought down because of the India-USA tax treaty. So Swastik referred to Form Ben 8W, which gives a confirmation that you are a tax resident of India, you are a non-resident of USA, and you are therefore eligible for the benefits of the India-US tax treaty. In this case, the rate of withholding tax is brought down from 30% to 25% under the provisions of the India-USA treaty. So effectively, if you are an Indian resident, any dividend income that you earn from the US stock will attract US tax of 25%. That dividend money comes, let's say, to India, then it is included in your Indian tax return as well. Remember the basics of tax that you have learned in your CA intermediate. If you are a resident of India, and we are talking about scenario where you are resident in India, you are physically staying in India, and in that case, you become a ordinary resident. If you are an ordinary resident, your global income is taxable in India and you have to report it to the income tax authorities. So it means that even the dividend income that you earn from the US stocks becomes taxable in India. So if you are a high net worth individual like Abhishek, you will be subject to Indian tax at the rate of 30% plus surcharge going up to 37%. So effective rate can go up to 42% as well in India. So what happens is you pay tax in India of, let's say, 42%, and as against that you have paid a withholding tax in USA of 25%. You get a credit of this 25% in India. So effectively you pay 42% minus 25%. That is, the balance is what you will effectively pay in terms of cash flows to the Indian government. So your effective tax cost is very high, and this is particularly because of the high India tax regime that will be there. So just key takeaways: US withholding tax 25%. In India, you will pay the tax as per your normal tax slabs, and you will get a credit of the US tax that you have paid while calculating your Indian taxes. So this is as far as the taxability of the dividend income is concerned. Moving on, the capital gain is the next critical aspect. So let's say you invest through Swastik and Pratik's platform. Let's say you invest $1,000 in Google or Tesla, and you hold those investments for 5 years, and $1 lakh becomes $2 lakh. So you have earned a capital gain of $1 lakh in USA. So let's first see the tax implications in USA. Under the US domestic law, if you are a non-resident, and then the capital gains are fully exempt from the US tax. So any capital gain, so this appreciation that we talked about in our example will be completely tax-free in USA. There will not be any withholding tax or any additional tax, because the capital gains earned by a non-resident of USA is fully exempt in USA under the US domestic law. So this is as far as the US is concerned. Now, again, coming back to India, you are an Indian resident, so therefore your global income is liable to tax, and therefore this capital gain will be included in your tax return as well. It will be either a long-term capital gain or a short-term capital gain, depending upon the period of holding. So for shares, the period of holding is 2 years. So if you have held the equity shares of a US company for more than 2 years, then it will be a long-term gain, which will be taxed at the rate of 20% plus surcharge. If it is short-term, then it will be included in your normal tax return, and obviously you will pay tax on it. As there is no US tax which is paid on this, there is no question of getting any credit of this tax in India. So this is what is the implication from an India tax point of view on the capital gains income. I briefly mentioned about the estate tax. So this is a tax which is applicable in USA. If a person dies and if his wealth passes from one generation to the next generation, then there is a tax which is called as a estate tax. The rate of tax can go up to 40% in USA. The threshold for the US residents is about $10 million. So with indexation, I think it comes to around $11 million. But for non-residents, the threshold for the estate tax is very low. It's barely $60,000. So if you are a Indian, that is a non-resident from US point of view, which is holding equity more than $60,000 in USA directly in your individual name, then the estate tax could be applicable if the holder dies and those shares sort of pass on to the legal heir. So it's a 40% US tax which is applicable. This is just for your information, or if it is something which you should know of. The estate tax can play a critical role as well. So, so these are some of the broad implications from a tax point of view, both at the US level as well as at an India level. One last comment, this LRS limit is applicable of $250,000. It is applicable to per person. So just one tip, if you want to build a portfolio over a period of time outside of India, all the members of the family can perhaps utilize the LRS limit. So if, let's say, there are 4 members in the family, you can invest, you can remit up to almost $1 million, which is a sizable amount under the LRS route overseas. And I think there is one particular clarification in FEMA that through this joint investment, particularly for buying a real estate where the value of the transaction could be very high, the investment can be held in joint name as well. So if you are looking at using LRS route for real estate property, you can club the limit available for all the members of the family, and it could even be LRS could be used even for a 6-month-old baby in your family. Technically, even that baby is eligible for $250,000 limit. So it's a limit which you can use wisely over a period of time to build a portfolio as well. So Abhishek, over to you. These were my brief comments.
Thank you, Ame. Lot of ideas. The TCS provision I was not aware about. That is a new thing that I came to know about TCS. Withholding tax, I had studied STCG and other parts I had studied, but that withholding TCS part and the inheritance tax I had not thought of prior to making an investment. I hope that inheritance tax comes in India at some point of time, and we are able to contribute good amount of wealth to the subsequent generations. It was wonderful. So there are some
I'll
wonderful.
actually just make a quick point on the tax part, right? Which, and Ameya, thanks for that. In fact, the last part that you were mentioning about real estate investing as well, and we sort of see this in looking also at quite a large number of ultra high net worth people who've sort of invested. One of the interesting, I'd say, efficiencies people tend to do is you actually create a company, and then you become shareholders of the company to then invest in the real estate as well, particularly like when people invest in the UK and the likes. So I just thought especially given the kind of audience, these are one of those more interesting points, which otherwise I would never really bother telling.
No, the chartered accountants and the students will be interested in finding out some good, clever ideas to route the transaction. Yeah.
Because the longer term idea of being able to utilize that company structure for liquidating real estate and then reselling real estate makes it far more tax efficient. Because real estate is one asset, however, that even though equity investing is cap gains tax free, real estate becomes a very different monster. Okay. But that's the one part. Sure.
So there are multiple questions that have come up. I will read out the question and you can take up that particular question. There's two questions which are similar. How is Vinovista regulated in India, whether RBI regulates it or SEBI regulates it, and how safe it is for investing for an Indian in this kind of asset?
Yeah, sure. So in fact, regulation was one of the key parts where we spent a lot of time with. We in fact have one of India's leading lawyers, 𝐴𝐧B and Partners, that helped us design our appropriate regulatory structure. So in fact, and this actually is, this is slightly less understood as well. So when we first started the process of, what's the SEBI license I can get? And I reached out to SEBI. There is actually no license you can get to be a self-directed brokerage platform on overseas securities. And that's actually quite an important point to mention, because as a broker in India, you are brokering on a venue which is listed in India for a particular financial instrument, right? So that's why I could not go and get a broker license of any kind to be brokering, say, Facebook and Amazon stock because it comes outside of SEBI's purview. Investment advisory is one thing which is slightly gray. So we don't provide investment advice. My main thing was, how do I design a platform which is something I could have my mom be very comfortable in terms of investing utilizing, right? That was like my number one thing. And so we are actually regulated by the UK's regulator, the FCA. And even though we have a presence in the US, in the UK, and here in India, we have an Indian company, which is the company that is soliciting the investments, because it is currently, self-directed investing is unregulated. We are looking to get investment advisory license in India progressively. But the main thing is that right now, in terms of the brokerage only services, it is the UK regulator. This, in fact, gives a lot of guidance, not just to us and our clients, but even to our regulator, to the SEBI. So we are in touch with SEBI in terms of, in fact, back in January 2019, SEBI had asked me to write a short kind of memo for them on how they should think on overseas investing, because it was clearly a gray space. And back then, there was still not as much interest as now we've seen, 18 months down the line. So we are regulated by virtue of having our company here in India. We're based out of Mumbai in terms of our office for place of business, which is under the company rules for solicitation. We are regulated by the UK's regulator with a capable license to solicit clients outside the UK and Europe as well. So that's one key distinction as to how, we are organized. Why our platform, and there are a few others out there, why our platform is, being very client centric, even though, so both Pratik and I are regulated persons on the FCA's register, for example. That's number one. And we've got a lot of experience in the space. Secondly, we know that, of course, a lot of Indian law is based on English law, and a lot of Indian regulation is based on English regulation. So it's far better compliant for our clients. Our terms and conditions are very clean, we like to say that a 10-year-old can read them. And that's quite true, because we've sort of seen other people trying to come up with these platforms and try to just do a lot of legal chicanery and engineering in terms of how they're trying to do this. So that's how we are regulated and how we are present in India. I think there was a second question you had said, which is linked to this.
Yeah. Before that, there is one linked question. Amey can answer, I think, this. Are the family trusts allowed to invest abroad? So family offices or family trust?
No, I think family trusts cannot invest abroad. It has to be either an individual, or if it is a company route, then it's a ODI route under FEMA. So answer is no.
Okay. So Swastik, there is a wonderful question, like which are the ETFs or basically funds available for an Indian to invest in the US? Because in the US, what normally typically happens is ETFs are run by some private company, like maybe Invesco or maybe something like a Vanguard or something like a Power Shares. So there are different ETFs. So can you just tell the popular ETFs for the Indians to access?
Sure. So in fact, quite important to not worry about is the manufacturer of the ETF or the issuer, because these are all very, very well regulated, long state traditional companies. And more important is, what is the index strategy? So whether you want to invest in the S&P 500, and then you've got an iShares version of it. There's a Vanguard ETF, which is also doing it. So I think for us, we've got iShares on our platform, which is a BlackRock company. BlackRock is in fact the world's largest asset manager. We've got, so you can classify ETFs into various kinds: equity-based ETFs, fixed income ETFs. These are single country ETFs as well. So you can invest in, say, MSCI Brazil or MSCI Mexico as a theme. And then we've got, the other thematic ETFs like gold and gold miners, for example. So in terms of companies, we've got all sorts of companies. So Power Shares is the company which has got our NASDAQ 100 ETF, for example. Sorry. We've got Vanguard ETF, which is, I believe, for AGG, which is the US corporate bonds ETF. And that's actually the right way to think of it. A good place to see as a location in terms of understanding various ETFs is a website called ETFDB, which basically stands for ETF database, and which gives one of the most exhaustive databases, publicly free and available, for you to understand, okay, what are these ETFs available for us to look and compare different kinds of ETFs. And of course, we've got commodities ETFs as well. So you can invest in oil and track oil pricing, and then you can invest in, say, silver as well, and then sort of track silver prices.
Okay, so I'll take up. Is it possible to invest in the real estate investment trust through this platform, REITs?
So not yet. I'm Pratik, and you can correct me if I'm wrong, but we haven't yet put up a US REIT investment yet. But we're looking to really expand our set of securities to being over, by a significant amount in the next 6 to 8 weeks. In the next 2 months, we will have over 1,000 securities as well available, where we will be able to provide a much larger, wider universe of investments to make. We really wanted to test and understand our clients and what they're really looking for. And we've seen that, as and when we have, and we're actually very open, once a client's funded their account and they want to invest in a particular theme, we can just verify whether we've got access to it and quickly add it onto our platform within a few days.
There's another doubt. What is the use of an international multi-currency account? Like you are planning for a multi-currency account. What is the use of that multi-currency account?
Sure. It's actually a very good question. And I'll tend to go back to the LRS, sort of flows as well. The multi-currency account is for, you to be able to invest. So you've got a brokerage account, which is, you can only invest in the brokerage account. And if you then want to remove capital and repatriate capital out of that brokerage account, you have to send it back to a bank account in your own name, right? And if you don't have that bank account overseas, you need to send it back to your account here in India, right? Which basically means that all of that efficiency you wanted to pay for your kids' education or to buy real estate is lost. That's quite important by you being able to create your multi-currency account. Basically, it's not necessarily a multi-currency account. You can choose which currencies you want. We have by default GBP and Euro, Sterling and Euro. The second thing is there's a lot of, people who are trying to, who are increasingly getting revenues from offshore, clients or so on. And that's a far more efficient way for you to be able to hold that, whether you're a freelancer of some kind, you're some kind of a exporter or importer, progressively. So, and you can make it far more cost efficient, and you might even have liabilities to pay, either as an individual or as a, as a company as well. And that's where the multi-currency account adds far greater degrees of freedom to. Tomorrow, what we are looking to also do is for travel and for student education, before your kid goes overseas to study, you can create an account, you can fund it. And before your kid has left the shores, he's already got a very fully funded account, for all of his requirements, whether it's to pay hostel fees, pay for food, etc. You can tag on a debit card linked to that account extremely quickly, so that when you're traveling, right, we can issue you a virtual debit card. You can add it to your Apple Pay or Google Pay wallet, and much of the Western world is completely contactless. So you never need to worry about having like a Forex travel card separately, which is very limited use. You've in fact now got a full-blown global financial services presence in terms of anything that you want. You can all do it through one platform. Like one of the things is, of course, when there's a Forex travel card, you convert it to say US dollars, you've spent it, now you've got say $1,000 left. What do you do with it? And you need to convert it back and pay FX. Why do that? You can just literally put that to invest in the US markets in an ETF. And when you are traveling again, liquidate a portion of it and continue using it. So far better efficient utility of all of your investing expenses in a singular platform rather than what is currently available to anyone in India.
Ameya, there is a wonderful question for you. Critics say that India's stringent tax regulation discourages the potential economic growth. Do you agree with it?
Well, I think the perception is, yes, our tax laws are complex, but just to give a little bit of a context, and Swastik can perhaps echo that as well, the US tax law is equally or far more complex than the Indian tax law. I can say that from the experience, the number of regulations, sub-regulations, provisions that are there in US itself is very complex. I think India as an investment destination, tax has been a challenge, but if you see in the last 1 year, for example, the corporate tax on the new manufacturing companies is brought down to 15%. It is one of the lowest in the world. I mean, you wouldn't find such a low tax rate elsewhere in the developed world, particularly. Yes, I agree. Individual tax rate is very high, 42%, and that's that is a big sort of policy call that Indian government has taken, and I think government, hopefully once the COVID pressure is over, can relook at making it more rational. Otherwise, it will have an effect of capital flight, where wealthy Indians will want to move out of the country rather than pay 42% tax. So just to answer that question, yes, tax laws are complex, but if we see it in the perspective vis-a-vis US, we are not that bad, number one. Number two, I think it's the whole investment climate policy around other regulations like FEMA, your licenses, all of that, and the cultural aspect make India complicated or different, and not just the tax law. There was just one point I missed in my session, in my talk earlier, is from 2016, there is a black money law which has been introduced. So essentially, any foreign income that you are earning from the investments, since you are a resident, you must report this foreign income in your Indian tax return. Otherwise, under the black money law, you are exposed to the tax as well as a stringent penalty and prosecution. And tax department can go back to up to 16 years to look at and tax your foreign tax return. Number one. Number two, all the investments that you are doing in foreign assets, they should be reported in your income tax return as well. That's also a requirement, and a very, very critical requirement which has come up. So particularly with the foreign investments, one has to be extra cautious as far as the reporting is concerned.
There is a related one doubt that can the losses that are earned in the foreign country be set off against the Indian gains out here?
Yes. So, I mean, now the Indian gains are, in a way, have become taxable if the value of gains is more than 1 lakh rupees. I'm talking about long-term listed shares, which is where you will make the gains. So yes, the losses can be set off. Earlier, when the long-term gains itself were exempt, you had a little bit of a difficulty in finding the right income portfolio to be adjusted, but now it is possible.
There's another common question. 2-3 people have asked this question. Swastik, you can take up. Looking at the current situation, looking at the political unrest in the Hong Kong, or looking at the political unrest that happened in the United States, or turmoil that can happen in November in United States, whether the US markets look better for investing? I think he's more looking at a short term rather than a long term picture.
Yeah, no, that's actually a very good question. It's, one of the key distinctions is that the world is always going to be in some sort of tumultuous flux, some part of the world or the other, right? And it's one of those rare events in the kind of pandemic situation that we are, that much of the world is in a kind of that space. I think the goal should always be that you must have access to as many opportunities as possible without getting wedged to any of them, right? And that's part of what Vinovesta's mission is, that there should be no opportunity that should not be available to you just because you're based in India. That said, yes, I think, different countries are going through their own different crises, whether it's a Hong Kong, but then again, China is still continuing to do extremely well. But as we know, the Hang Seng is in many ways a proxy for what China's performance really is. It's just sort of China's way for people to invest into China. There's a lot of round tripping of capital between China and Hong Kong, as we sort of very well know. Brazil's got its own sort of situation. There's a question mark, of course, on how come the US employment figures are the worst ever, and at the same time, it's the highest ever market, right? And that's, of course, due to what we realize is people are now trying to understand a little bit more beyond the first degree, that what happens when the Fed, or like the US central bank, suddenly floods the country with the liquidity. It's something like India has never really experienced, right? In terms of a massive flooding of liquidity, but it's actually this massive flooding that the Fed has done in the US that has continued to have the US stock market doing really well. But yeah, you're quite right that, the capability should be to continue to provide various kinds of investment opportunities. And it can be short-term, which is speculative, or building a true, robust, long-term portfolio, definitely. I'll just touch upon Ameya's last point, which he had mentioned about the taxation, between the US. And of course, US is a very, very well-regulated kind of tax system, and could be quite complex as well. But one of the key distinctions is that it quite clearly says, okay, if you're not resident in the US, it's very clean for you. once you've signed off on your W8 Ben form, there's no tax deduction at source on various different types of things. There's just withholding tax on dividend, and that's it. Unlike how we have in India, right? For an NRI in India, he still has to jump through a whole set of hoops based on where his money is in different pockets and try to optimize all of that. So that's one of those distinctions of taxation between the US and how we sort of see it in India, sorry. I'm seeing quite a few questions about the threshold, by the way. So yeah, so you can actually invest in fractions of shares. You can invest as little as, say, just $1 if you want into Microsoft, right? Or $1 in Amazon. It doesn't matter. That's one of the key distinctions in the US markets. So that, yes, Amazon is an extremely expensive stock at over 2.5 lakh rupees. You want to buy 1% of one share of Amazon for approximately $30, you can do that. As well as we don't have any minimum thresholds, but you have to be a bit cognizant about the cost of FX when you're trying to make that, the banks charge a fixed amount in your FX. So you want it to at least be efficient when you make that remittance, maybe minimum of a few $100s or so to have your first leg in.
So on this part, I can give you an idea because I faced that particular problem recently. If you are transferring the money from your Indian bank account under LRS to a foreign account, there is first of all, whatever exchange rate you see on the RBI website, that is not the exchange rate that is going to be applicable for a transfer. There is a telegraphic transfer buying rate and TT selling rate. So whatever the spot rate you see, approximately 60-70 paisa addition you have to pay for making a transfer, and plus on top of that there are fixed charges ranging from bank to bank. So couple of thousand rupees, about 1,500 to 2,000 rupees is the additional charges on top of that. Those are fixed charges, and around 60 paisa per US dollar is a charges that you can get for conversion of Indian rupees into US dollar. So that is what roughly you will have to pay, just like what you do at the time of travel, foreign travel. Ameya, there is a wonderful question for you. There is a chartered accountant from India who is right now settled in Bali, Rohan Kirloskar. He is saying he's an NRI. So are there any different tax implications for an Indian who is residing in the Bali and who is making the capital gain outside India?
So if he's an Indian and just because, so citizenship and the tax residency are two different concepts. You could be Indian citizen, but if you are a non-resident of India under the domestic law, and then you invest in US stock market, then it's not an event which is triggering India tax, because A, you are a non-resident as far as India is concerned, and B, the income that you are earning is also earned outside India. So you don't have to pay tax in India on such income.
Okay. So there is another one. Can we do SIP in the US stocks through this?
Yeah, so absolutely, you're welcome to do SIP, but the main problem lands up being the remittance problem, right? Because remittance is controlled still by the 81 banks. And this is due to one of the rules under LRS, that if you're making a capital account transaction, you must remit money from your own bank account currently. So even though, we would love to be able to set you up for SIPs and sort of give, a bit of a nudge, the friction still stays that you must go back to your bank account and make the remittance, into the account, and then just sort of instantly invest it as well. So that's one of the challenges that, we sort of have our hands tied due to how the remittance process works. I'd love to be able to make this, as seamless as possible. One quick point, Abhishek, you're mentioning on the FX thing, and due to the kind of audience as well, it's something we'd love to have you all explore. There was a platform which the RBI created called FX Retail, FX-Retail, which is by the Clearing Corporation of India, and that actually allows you to book your own FX rate, right, in a central counterparty way. And then you can go and tell your bank that I've already booked this rate at the certain price, so that your bank then has to go and honor that rate. And I would, in fact, because of this community, I'll actually recommend that you all please take a look at this FX Retail website and see if it works. And please give that feedback to us, because it is one of those things.
Can be used for foreign travel also?
It can be used for booking FX of all kind.
Okay, great.
Yeah. And it can also be used whether you're an institution or you're an individual, and you've got a one-time registration fee of 300 rupees or 1,000 rupees to register on the website. I'll share the website. The parent company. It's a governmental organization. It's sort of run by the Indian regulators.
For our audience, this is a great benefit. Remember, when you go for a foreign travel with the family, you will be at least spending 4-5 lakh rupees bare minimum for any foreign travel. I'm talking about a family foreign travel. So you can, at least let's say for a travel purposes, the conversion charges that are applied are quite high. Like I remember last 2-3 times almost I had to spend, in spite of having a good relationship with the banker, I had to spend almost 1 rupee 20 paisa for certain currencies for converting Indian rupee to that currency. Now, if there is a clearing corporation allowing you to be directly a part of that market, I was not aware about this website. So
yeah,
if you
very new thing, absolutely, and Pratik and I was sort of just stumbled upon it as well, but we clearly see that this is something which is a progressive step, which the Indian government and regulators have taken to open this market up a little bit. We don't, we've not been participants of it because both Pratik, I are NRIs, and you can't really participate in it. But we'd love to be able to sort of get real live on the ground feedback of how well this works. We spoke to a couple of banks, for example, on ICICI, even when you do digital remittance, it gives you the option, have you booked it under FX retail, right? There's a button where you can sort of select it as well. So definitely this thing is something which is live and is sort of now working and can really bring down the cost of that remittance.
It can really bring down. I remember there are certain currencies where the conversion charges are almost 14-15% of the spot rate. So if you're going to some country, let's say somewhere in Africa, someone who is a, let's say, wildlife photographer or who loves wildlife completely and he wants to go to Africa, the certain currencies where your Indian currency to that African currency, conversion charges go up to almost 14-15%.
Absolutely.
So if government is providing such a platform, it is wonderful.
Yeah.
Yeah. I think that is a wonderful discussion that we had. There are a lot of doubts. If we keep on taking up, it will go for another 1 hour, 2 hours. I think we should stop there. You want to add something, Amey, at the end?
No, it's an interesting field, and Swastik's platform is very interesting, exciting. I think a lot of students I saw asking questions. Can we start with a small amount? So I think you should definitely experience it, if not US markets, at least the Indian markets, if possible, and then graduate to US markets as well. So keep a watch on it. I think it's an exciting field, and wishing all the students a very best for their studies, future professional plans. And thank you, Abhishek, for giving this opportunity.
Yes, thank you, Amey.
Yeah.
Swastik?
Abhishek, if you want, this is great. There are quite a few simple, I can give you like a one line answers for quite a few of these.
You can go ahead.
You can start with as little as $100. We've had clients who've just started their accounts with investing just as little as $100. So there's no minimum bar in terms of the questions about, where should I invest? We sort of suggest, we can't make recommendations particularly because, like I said, we don't have the license to, but most people tend to invest in just the S&P 500, which is just a tracker for the US markets. Or if you've got, intentions of investing in any particular names of stocks, and because it's all fractional shares, there's no minimum kind of size. Whether the question is about, US markets are at lifetime highs. Now the questions, of course, but for each of the last 3 years, at some point of time, the US markets have been at a lifetime high as well, right? And as we know, you can never sort of predict and time the markets. The website, I think there's a question about the website. The website's just simply www.vinovista.in for those of you and who are interested. I'll just type it out as well, to keep it easy for people to refer to it, and then you can download it on Android or on Apple. Okay, that's already been answered. Sorry. But yeah, I would be very happy. We've got an email, hello@vinovista.in, in case anyone's more interested. You sort of have started the process of onboarding yourself. Please let us, reach out to us if there's any other question. And yeah.
Yes. Thank you Thank you, audience. It was a wonderful session. I hope it helped you all. At least the thought process has started, whether you're looking for a foreign education or a foreign travel or a foreign property. Yeah, other day I'd asked a question in the class, how many of you would like to go for a foreign education? Almost 30% people had raised the hand as if the chartered accountancy course offers nothing. I don't know why so many people are frustrated. Maybe they are looking at Mr. Rahul Gandhi or Mr. Sonia Gandhi's tweets that democracy in India is being challenged. I really don't think so. So there are a lot of people like that who want to leave India. So maybe you can think of creating such kind of a portfolio at a very younger age. Thank you. Thank you, Amey, and thank you, Swastik. Thank you.
Thank
Bye-bye.
you. Pleasure.
Bye-bye. Bye.
Thanks a lot.